Jamie Dimon is a highly regarded and respected CEO in the international business community. Since 2005, he has capably led JP Morgan Chase, a massive financial firm that he has guided to become the largest non-state-owned bank in the world. In addition to his current net worth of $1.7 billion, the CEO is widely regarded as a master of macroeconomics and a luminary in the world of finance executive management. For example, he seems to have led JP Morgan through the prolonged COVID-19 recession and the volatility that followed with reasonable ease, as he did during the 2008 financial crisis. We should listen to him when he speaks because of his deep knowledge of macroeconomics and his access to cutting-edge research data that we cannot even begin to comprehend. We can't be naive and think that he doesn't have a hidden agenda in his public statements, but it would be just as foolish to disregard everything he said because of how we feel about him. Doing so could end up costing us a lot of money in the long run. Welcome to the Financial Fortune YouTube channel, your trusted destination for the latest updates and insights on the world of finance and economy. In today's video, we address a headline that has been sending shockwaves through the financial community. JP Morgan CEO declares economic and financial collapse. Prepare for a gripping discussion as we explore the implications of such a declaration from one of the most influential figures in the banking industry. Get ready to dive into the details behind this alarming statement and understand how it could potentially impact the global financial landscape. The first inkling of a protracted era of economic instability and suffering was bestowed upon us by Jamie Dimon on May 22, 2022, at JP Morgan Chase's Investor Day, when he spoke of a robust economy but large storm clouds. Dimon doubled down on his warning a week and a half later at a financial conference in New York, attended by investors, media makers, policymakers, and financial experts.
I said there's storm clouds, they're big storm clouds, it's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself. So JP Morgan's bracing ourselves, and we're going to be very conservative in our balance sheet with all this capital uncertainty. We're going to have to take actions, and I kind of want to shed non-operating deposits again, which we can do in size, to protect ourselves so we can serve clients in bad times. And so that's the environment we're dealing with.
When JP Morgan gets ready for a storm, you should too. But why would Jamie Dimon publicly state his expectation that the economy will suffer? Couldn't that lead to a bank run and the problem he predicts happening sooner rather than later? For what reason does Jamie Dimon anticipate a hurricane-like economic downturn? How serious can things be for JP Morgan to drastically change its existing strategy? At the moment, optimists outnumber pessimists when it comes to the economy. Spending by consumers has been on the rise, growing by 7% to 9% over the previous year, and by 23% over the predicted 19%. This rising consumer wealth and spending has led most people to believe that all is well in the economy, with unemployment figures remaining at 3.7% lower than the long-term average of 5.7% and the all-time high of 10%. As stated by Jamie Dimon himself in a letter to shareholders released on April 4th of this year. Wage inflation of 6.1% in April 2023 is higher than the 4.9% growth in the Consumer Price Index, or CPI, suggesting a healthy labor market in the United States. If you believe Bloomberg, CNBC, and other legacy media, the economy is doing splendidly and you have nothing to worry about. But you can see through this mask. After major financial companies like SBV and Credit Suisse collapsed after hearing such statements from Jamie Dimon, market expectations shifted dramatically. Real CPI is higher than one would expect from headline inflation data, with necessities like food increasing by 6.7% over the year, shelter by 8%, and transportation by 11%, all of which are far above the annual wage growth that we actually see in the United States. To put it simply, if inflation is higher than the market, pay growth needs to grow at the same rate to counteract the rise in consumer prices, which in turn leads to increased production costs, which in turn leads to rising consumer costs, which in turn causes further inflation. In the current U.S. economy, this is happening, but at a slower rate due to stagnant wage growth. This is not a problem that is going away anytime soon, and the only way it will stop is if the Fed keeps raising interest rates, which would kill the economy by making everyone stop spending. After discussing the current economic climate, we may move on to Jamie Dimon's predictions and the reasons behind them. It's fascinating that Dimon has come around to the idea of early chances, like the role that the fintech platform played, but we rarely have the resources to take advantage of such pre-market possibilities. Dimon has received some recent substantial signals about his economic uncertainties in 2023. Jamie's mental search for a more agreeable answer culminated only minutes after his exhibition of stuttering and fumbling. In admitting a systemic issue, he contradicts himself by saying that the banking crisis was caused by isolated problems at specific banks.
The only real difference was we called concentrated clients. So Silicon Valley Bank had, a handful of people who controlled 35,000 corporate accounts, and they just left. $140 billion or something over a course of 2 days. That's not happening to other regional banks. Well, they don't have that issue, nor do they have all these other issues. So it's only a handful that are much offsides.
However, Dimon was unable to explain why First Republic was acquired by JP Morgan for a total of $104 billion in deposits and the bulk of its $230 billion in assets, despite the fact that First Republic did not have this concentrated client problem.
What's going on with First Republic? I mean, you led the effort to swoop in $30 billion from you and your fellow banks to try to steady First Republic, and you've acknowledged we don't even know yet if that worked.
Yeah, that was an attempt to try to give them time to resolve a situation. We represent them, so I really can't talk about any more than that, and we hope it resolves one way or another.
Could Jamie possibly be keeping something from us? Why else would he be so awkward on the international stage? After saying he was optimistic that the problem will be handled, he said, "I don't know," when asked if he thought any more banks would fail in 2018. Despite Dimon's reluctance to directly address this domestic banking crisis, he does comment on the Fed's ongoing interest rate hikes, characterizing them as the tide going out for borrowers in the sovereign and corporate bond markets, and citing a quote from his good friend Warren Buffett.
I don't think this is that kind of crisis that you're going to have it ongoing forever. It will be, now Warren Buffett said when the tide goes out, you mentioned something else, rising rates is that tide going out. And if that tide goes out a lot, so I would tell people, be prepared for higher rates. I don't know that's going to happen, but be prepared so you're not in that tide. So, to me, yes, you have a chance that long rates will be going up and people might have to get used to higher for longer.
If we're to believe that Dimon is saying that interest rates will stay higher for longer, we can tell for sure that there will be a pull from capital away from the stock market and equities on the whole. As we conclude this critical video, we are left with several thought-provoking questions. What were the specific reasons behind JP Morgan's CEO declaration of an economic and financial collapse? How does this declaration align with other economic indicators and predictions? What steps can individuals and investors take to protect themselves during times of uncertainty? As we navigate the complexities of the financial world, it's essential to stay informed and seek multiple perspectives to make well-informed decisions. Stay tuned to the Financial Fortune channel for more updates on this developing situation and valuable insights into safeguarding your financial interests. Remember, knowledge is a powerful tool in uncertain times. Until next time, may your financial decisions be guided by wisdom and foresight.